High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. Master the Markets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Okay, hello traders, and welcome to our live trading workshop. Now today what we're going to be covering, those of you new in, if you don't know the format, so we'll be looking at some live trading potential trades. I'm looking at gold for today. Let's see how that goes. I'll also analyze a few more instruments with you guys in real time and apply one of the strategies that we go through. Remember, the whole objective of this part here is to teach you how to fish and not to give you the fish, okay? So that's the first thing over there. After that, we'll go through our exciting topic, which a lot of you have shown a lot of excitement for today, which is what you're saying is one of your main challenges, which is about getting precise exits, okay? Because exits, as I explained with Angeline when I was invited to the IG Index studio, is what makes you the money or the loss, right? Realized profit or loss. So the precise exit is what we go through, and how do we go through it based on probabilities, right? Which is what we are showing here in the tables over here, which I'll go through a bit more in detail later on. Finally, then we'll also update you on the upcoming events that are coming up on our side, and also the Q&A as well, okay? So this and more in this live trading workshop. Hi traders, for those of you joining in new for the first time, this is Chun Alpa here, founder of Master the Markets, Illitrators Conference and the Traders Open Day. So let's dive straight in. I'm just going to take a look at the different instruments over here. So just give me a minute or two. So let me just see. Right, over here, in terms of the range runners, just give me 1 or 2 seconds. I'm just going to, but as that's loading up, I'm just going to take a look at quickly at gold. On gold, the range yesterday was 244, $2, 200, 244, isn't it? It was the ATR range. Today, it's just a tiny bar. This might take off, actually. So we'll wait and see how that carries on. In terms of here. So let's see, 113, isn't it, is what we got over there. So let me just measure this. Let me just open that up for you. I'm just going to scan it through because sometimes, because I've got to keep opening tabs on TradingView. So usually to get the filter, I usually just take a look through this one here, MT4 here, because I can just flick through very quickly. So I'm just going to take a look at that at the moment. So here we got the about 72, isn't it? That one, the range is done. So leave that. Remember, I'm aligning it with the objective. I'll give you all some reference links later to look at this, what I'm actually doing. I'm just looking if the range for today has been formed or not. 0.8 times 350, 320. I think this one we can look at it, right? 356. I'm just going to take a look. I don't think so. So, you know what? On DAX, I will analyze this. DAX is usually quite good, actually. It will at least do 200. So I'm going to put it over here on DAX over here. I'm going to let that load up, and all our smart money framework indicator all load up as well. Just as I remember, we're doing a masterclass webinar as well that you guys can see everything collated together at some point. I will tell you all that as well in a short while. It's almost ready. We would have wanted to get it earlier, but it is what it is, isn't it? Gold is another one here as well that hasn't done its range yet. It's a bit stalling at the moment, gold, isn't it? 284, 240, yeah, definitely not. What has it been doing in the previous ones? Yeah, it has shrunk a little bit, traders, isn't it? $79. It's in a consolidation. Not consolidation, but narrow range bars, really. I mean, is what we're looking at. Dollar yen has definitely done, is one of the biggest movers at the moment. $1.80, 920, definitely done that. And then Brent is done that today. We'll be looking at Brent. This will be an end of day one for all of us to look at today. We will be definitely be looking at that. That's looking very strong. Silver, on the other hand, another outlier on the weekly. 13, 14. So we do our January update as well. In fact, I know some of you have been asking. We've been had an incredible month last month, 16% up. So I know we will update that just like we did for 2025 whole year results. We'll look at January results. It's very surprising. It's really very outstanding month. We were surprised ourselves as well. So $8 here. This is $5.25. Is that right? Can we take a look at silver as well? So 13. I'm just taking a look at this 13, 10, 40. This is let me see. Yeah, 82. Yeah. So it's only done $5. So it's saying that the ATR is about 13, is it? Okay, he's taking it from the previous ones. What's this about? $5.35. It's kind of done it, isn't it? I think in my radar today would be gold and DAX traders. So I will take a look at DAX as well. And then we'll push it out on our Telegram channel, which most of you will have the link for. If you don't have it, you will see a link come through. You can join it through that as well. Okay. So now that I've got all of that, which one hasn't done the range? So now I will go through in here. So I'm just going to take from the trend box here. This is one of the most important things I'm going to be talking about when we go through precise trade exits is your quantification of your top and bottom. Here at Master the Markets, you see we have quantified it by a blue arrow and a blue dot and a orange arrow and an orange dot. Okay, but according to this one here, we only keep the last two dots, just keeps it nice and clean. We don't have the previous dots, but it will come in for the last two recent ones, so that it's much more easier for forward testing reasons. Now, in terms of this, you can see that because we got the bottom and tops all quantified across all time frames, and this was done back in the 1960s, right, by my mentor's mentor. When I convert that into a line diagram, you see, I can quickly see what trend it is. And there are about 6 trend variations, okay, traders. And that's what we have coded into this trend box here, right? So that's what we've exactly done over here. So in terms of that, so that is uptrend phase 1. Okay, I just remembered something that I need to tell the programmers about. Let me just write that down over here. It's thanks to our clientele pool, isn't it, traders, that we actually got all of this programmed. You know, our programmer team is also expanding. Most of our programmer team are in the Vedanta Elite program, which is all to do with the research side of things. You know, not everybody's cup of tea is research, but those who are interested, they come and join on to that, and they're very fascinated by what we have done, actually. In fact, one of the our clients who actually coded all of this was one who just came in, just like you, watching all these YouTube videos with us, got very impressed, and he said, you know what, I want to join you guys, and I want to code this entire thing for you guys, you know. So that's how we got all of that. So you see, that's how I can pull the trend across all time frames, and this is what people find it very, very useful. Now, in terms of this one here, 1 hour, it's also an uptrend phase 1. Okay. And 15-minute time frame. You know, in fact, just reminded me of something I read in the book yesterday, Morgan Housel's book, Psychology of Money. Right? Not sure how many of you have read it. If you read it, type into the chat box if you read the book Psychology of Money. He talks about this as well. He says, you know, where you get out, what your objective is based on your time frame that you hold as well, isn't it? Remember that here we are just looking at just smaller time frames to enter and exit within the day. So therefore, my profit targets also be much more shorter. I don't really care about the longer term macro perspectives, you know. But for the investment portfolio that we run, then we look at all of that. Okay. So that's the difference. So you got to be careful of that, because I know some people get confused and they say, "Oh, didn't you hear what gold was in the news and everything?" Like, and you know, it says it's going to crash and everything. And why are you going long? But remember, this is just for a very small space of time that we're looking at, right? So there's an uptrend phase 2 at the moment here. And on the daily, it's an uptrend phase 1 as well. So on all time frames, the uptrend phase 1, except for the 15-minute, which is a uptrend phase 2. The phase 2 is the counter trend part of the move. And we have explained that as well in one of our videos, okay? Right, so we got all of that over there. Now, in terms of the stretch lines, isn't it? In terms of the bar mechanics, so let me just take a look at that. Again, this was also coded by one of our clients as well, Anton from Canada. He actually did that. Assad was the one who did on TradingView, the smart money indicator that you guys got here as well. So really good. This one here, let me just quickly check this, traders. Has it taken out today the lower stretch? No, it's not, isn't it? So it's only taken out the upper stretch. So I'm just going to write that down as well. I'm going to show you this table in a minute. And then range lines wise, let me just see. This was what time? This was 12 o'clock. And the 8 o'clock one, it has definitely taken it out. And right now that's 2:15. So what I would say is 12 o'clock it hasn't. But then, interesting enough, let me see what the 8 o'clock was. This was the 12 o'clock range, wasn't it? Let me just check here. Okay, here is the low. The low is 5023, and this one is 5018. So in terms of 12 o'clock, it has taken it to the downside. So I would say latest is lower range. Bro to ST ratio, let me take a look at that very quickly. Here, I would still say, sometimes it's a bit obvious when I do it like this. It's still to the upside. Okay. Yeah, so that's to the upside. Don't worry about the terminologies. I'll send you that in a minute. So I've got everything here. And my bias is coming out to the long side, okay? Right, so here's a table. Some of you would have seen that before. So the table goes like this, okay? But remember, before you construct any table or you want to use these principles, and I know a lot of our clients have actually used these principles for their own strategies, right? So if you want to take a look at this, what the main objective here is that why we are collecting all of this data here, these 8 columns, right? 9 columns. It's the first objective of any entry parameters you got. It's towards basically your direction bias, okay? Do you want to go long or short? Okay, that's the first premise. Now, the second thing is then timing. Just because I've got long, I don't just jump into the trade, okay, traders? So then I got to look at the price levels that it's got to take out to get in. If you looked at our YouTube channel and on all our live streams from before, you would see that, and I'll show you the reference links later, that we just don't jump in. And because of that, how many times we have actually preserved our profits, you know, and not taken unnecessary loss, okay? So that's the whole main important thing. It's not about getting it right all the time. It's just about following your process and your system in a manner, in a consistent manner that is going to age, that can monetize its age in the long run. Okay, that's the whole premise. So here, what I'm really looking for, what a really good one will be to look at, if it does, you see there's a volume spike here as well. This is all provided by the trade guider team over here as well. And if you can see that this bottom, if it is sustained, okay, and then if it then goes on to confirm its bottom, all right, if it then goes confirm its bottom, then we can probably, highly probably, start to look to take a trade on that. Okay, so that's what we're looking at. But for now, not yet. And I'll look for a bit more confirmation. The only thing that is kind of worrying me is this one here, where it's taken out the last range. Okay, so I'll wait on this. I'll wait and see, and you guys can take a look as well. I don't think this is going to confirm, but we'll wait and see. The formulas confirm it in about 3 minutes. Also, we've got to wait for another 15-minute bar. Do remember that in trading, patience is important. I'll take a look at now DAX. Now DAX, on the other hand, very quickly I'll do this. Time is running by. Uptrend phase 2 is what I got here. All right. And then here I've got a downtrend phase 1. See, this is the importance of quantifying the framework. I'll talk a lot about that when we come to the topic. Just hang in there. And then over here, we got the 1 hour time frame. So that's a 15 minutes. So let me just do the 1 hour very quickly. Just populate it. I can see volume spikes over here. I'm sustaining that bottom. That is provided by the trade guider team over there. Downtrend phase 2 is what we are having. The trends across the different time frames are not very clear here, are they, traders? So downtrend phase 2, and then the 15-minute, what am I having? Uptrend phase 1, okay, is what I'm having. Stretch, this might be looking like a trade, and it just, if I'm not wrong, confirmed. There's an uptrust over there. You can see this is a good one, but you know what? We should have taken a look at this before, isn't it? I haven't finished the analysis, but I think, you know what? Let's be patient. Let's not jump in. We know what happens like that. So here, interesting enough as well, there's a lower stretch only been breached, isn't it, traders? So that tells me another thing as well. Yeah, so let's see. The lower stretch here. Range lines, right? What range line is this one here? Right, this is at 9:45. Let me see. 12 o'clock is where? Let me see. This is 8 a.m. is here. So it's taken out the 8 a.m. one, but 12 o'clock is here, isn't it? Between 12 o'clock to midnight. Okay, so it's taken out the 8 a.m. one, but not the but not the 12 noon one. So I will write over here 8 a.m. taken out. Let me just type that down. 8 a.m. downside, but not. Okay, so I will write that down here, but not 12 noon range. Now, Bro to ST ratio. Let me. This might be a trade coming up, traders. So I will. But they're all not setting up easily. Okay, so here what we got Bro to ST ratio is towards the downside. Previous daily low. And entry bias. Let me just put that. Right, let me quickly analyze this. So this one, I think I updated the wrong one. Good. So previous daily low is taken out, isn't it? Yeah. This is to the downside as well. Yeah, I think I've got everything. Now, this is a good one to go through. I think I'm feeling that this will probably be a more clearer one here. So if you take a look at the DAX, right? So if you see, it's an uptrend phase 2 on the daily. So it's towards the, it's an uptrend, but then the direction is towards the downside, okay, top to bottom move. Downtrend phase 1 here on the 4-hour. And then on the 1 hour, you got a downtrend phase 2. And then on the 15-minute, you got an uptrend phase 1. So quite a little bit, isn't it? It's all over the place a little bit. So we're not very sure on this one in terms of the trend side. But at least 3 time frames direction-wise, at least pointing to the downside, isn't it? But then you can argue for the uptrend side as well, right? Because phase 2, this is direction, and this one. So not really the best on those 4 columns. Bar mechanics wise, it's all pointing to the downside, right? These 4 columns here. I always give more weightage to the bar mechanics because that is the main objective of the strategy for making the range. So my bias on this would be short, but here's the caveat, right? But in terms of the timing for this, okay, so this is where we need to be very clear. I'm not going to jump into this thinking for a short here. So what we need to be looking out for is if it does come up to its downside, my first level, right, traders, I'll be taking a look at, I'll be keeping an eye on, is this one here. Okay, and then as it plans out, then we'll see our stop where it goes as well. So I'll put the blue line over here. Okay, and here would be my stop loss as of now. Okay, now towards the upside, the bar mechanics is not really helping, but then the good part here is that, you know, just on volume perspective, we can see that there is a higher low test and it's coming back on the upside, but just that the price across all time frames not correlating. Now if you just did a very simple one in terms of just taking a consistent execution, which some of our traders do, which is on the dots over here, but only taking the phase ones on the 15-minute towards a very small target, which I'll show you on precise exits in a minute, you would have made profit on this, which I'll show you in a minute. What do I mean by that? But that's a totally different strategy with a different objective, okay? Which is what I will talk about later as well. All right. That's one thing I need to talk to you guys a little bit more on the topic side is the strategy objective. Okay, strategy objective. All right. Okay, good. So we got all of that. So I'm not getting any hit at the moment. But if I were to look at anything, I would look for this level to come down first. 24,889 is what I would look at. So you guys can track that and see how that plans out to be. Okay. So I'll keep that on the thing as we talk through the topic for today. In fact, let me see if I can move it to the other side. What is gold doing on the other hand? I didn't get a necessary strong hit on that as well, did I? I mean, I did take a look at it on the long, but we need a confirmation, don't we, traders, right? So it's okay. We'll flick through as we go through the presentation. Right. So if you got any questions, please type into the chat box. I'll answer them later. I can see some coming. But the first thing that's coming is, where can I find all these reference links, right? To understand all of this, what you're saying, because some of the terminologies are off my head, Tiru. How do I understand all of this, right? So here's quite a few links that I can give you. So let me just bring up this one link as well. I just remembered this one here that I should bring up, right? Which is the SMI OE page. Because some of you have been asking, how do I get that indicator onto my charts, right? So yeah, I think I do have it here. Let me find that. Yeah, I do have it here. Let me see. Is it in here? Or maybe it's at the top. Let me see. So, we need the SMI Elite OE page. That's what we need. Let me see, traders. Just give me a second. I'll just find this in a minute. Just the OE alone is what you guys were asking for, wasn't it? I know some of you were asking for that. I think Glenn send me that. Thanks for that, Glenn. So there we go. Oops, I think it's opening up the wrong one for me. It's the one that talks about the, nope, it's all right. So yeah, it just talks about the image. It's fine. I think I'll find it later. I used to have it here. I'm surprised that it's the one that talks about the SMIOE. Because some of you were asking for that. I think it's fine. I think time is going by. I can't seem to find it. I thought I used to have it here. Ah, I found it. There you go. Yes, got it. So that's that one there. That's the SMIOE. But anyway, before all of that, the first place to start, traders, for you guys to take a look at, 7steps to CTP.com. This is where it will explain the entire framework step by step as well. And this is where some of you already watched it. Today's topic will also make sense as well. And I'll give you some bonus points on top of that that you can use as well. Okay. So that is 7steps to CTP.com. After you've put all your details in and everything, then you take a look at this one over here, where the fast learner link that will be there in your emails if you want to watch all the 7 videos at the same time. Then you can see over here that it will take you step by step, okay? So the first video is, what is the problem you're solving? Which I'll talk a little bit about later on today in the topic. After that, how do you solve it? By quantifying the tops and bottoms, which is what I showed you over here as well, right? In terms of all the gold and everything over here, isn't it? Right? So over here, on how it's quantifying its tops and bottoms over here to give you the framework, right? So that's what it's doing over here. I'll just reload this one more time. The programmers are also making this a bit more smoother as well, because sometimes on the lower time frame it needs to churn so much data, so that's why you need to keep reloading it. Now in terms of the quantified tops and bottoms, this will give you the structure. This is so important, and that is the solution that it will give. And if you really follow the videos and the methodology, what these guys have created is actually mind-blowing, right? It's back from the 1970s. From that structure, then you get the 3 stats over here, okay? Which is what we'll be going through today. And the OE is the one which will actually give you the precise exits based on probabilities, right? Which I'll talk about later as well. And then go through the next 2 stats, and then finally how you apply it in your strategy, okay? So these are all the videos. So after you have, the first thing is, after you have got the videos, then go through them, okay? It will definitely help you in your trading journey. Now, after that, traders, right? Now, some of you who want to get that, some of you have already seen it, and you want to get that onto your screens, right? What you can do is you can actually go onto our SMI OE page, right? I mean, if you want to get the, I'll talk about the VSA in a minute. The SMI OE, right? So there's two actually what we got over here, isn't it? So we got the SMI OE over here, which you can see over here. And then we also got the VSA on the bottom as well, okay? So if you can see all the dots at the back, which tells you no demand and all that PB and all of this, right? So the first of them is the SMI, right? The Smart Money Indicator Framework, okay? And that you can get it on this page. This is the full-on indicator version with all the stats and everything, what you get and everything. It all tells you over here. So you can read through it, also get the subscription what you want. But over here for a limited period of time on our indicator, what we are also giving is a small discount code, right? About £50 discount code. So those of you who got VSA as well, you can use that discount code, okay? If you have spent already a little bit towards VSA, you can use that to get this indicator. Now, the other thing that you can also after that, you can also go on the Trade Guide channel as well if you want to get the VSA indicator, and you can then order it from their website on the Trade to Win package. Okay, that's what you can also do. All right. Now, the other thing is also the YouTube channel, right? So some of you have been asking about our YouTube channel. You know, you want to see some of our past live streams and all of that. Okay. So what you can actually do over here, traders, when you come to youtube.com/master the markets, right? You can click on the subscribe button. After the subscribe button, click on the all bell icon. In this way, every time we go live, you will get a notification on your phone. Okay, so those are the things that you can be looking at. Now, the other thing also is if you take a look, you can take a look at all our past live streams as well. Our 2025 results were very, very popular. In fact, a lot of them have revisited this quite a few times as well. So you can take a look at all of this as well when you get some time. And also all these videos, you know, to be honest, you won't see many of this kind of information anywhere else. And we really deliver the promise, what we promise as well, okay? So definitely take a look at all of them. And then the other thing also under our live section, so you see another one of what I want to tell you. Yes, some of you are asking about the stretch principle, right? Here, this is the playlist to go and watch. Okay, go and watch that. And if you like it, give it a thumbs up. In fact, all on our videos, you know, give it a thumbs up. We are always strong about, you know, spreading the truth out. If you like the video, if you think that someone else can benefit from it, hit the like button, comment on it, and the algos will push it out to more people to let the truth spread out even more further. Okay, that's how we've been able to actually formulate a very strong community. You know, most of our clients, once they join us, they stick with us for over 10 years, right? So that's what we have achieved. So that's all that. You can go on the live stream as well, look at all the past live streams, some really good interviews that we have done as well, STA talk and all that. So definitely you can go and take a look at all of them. All right. Okay, good. So now with that all said, quick shout out to Trade Nation as well. Trade Nation is the one sponsoring our ATM Summit this year as well. Okay, our Telegram channel, they support it as well. So all thanks to them. And in terms of if you want to open up an account and everything, there will be all the details over there in our channel as well, YouTube channel, and also on our email. So you can take a look at that and open a channel with them. Okay. With that said, a quick peek at gold and DAX. Gold is still hovering around in that range. DAX is looking to break out. That one is a good area to come out if it wants to carry on with its trend. But because of the bar mechanics, I won't be taking that. He's sitting on my hands on that. That's what professionals do, right? If it doesn't fit with your setup, you got to sit back. You know, it's not about getting just a buzz and just taking a trade for the sake of it. Quick thing on the events update. Yes, we're going to be in Dubai. We've been invited to Dubai. Some of you already are flying in, I know, to come and meet us, and also, you know, meet my mentor as well over there. He's going to be there for the elite clients. You know, we've arranged a meeting, so that'll be great. So that's happening in April. So you can find all the dates over here. So I've already booked my tickets. I'm flying in. Those of you who want to come in there, also check out all the other prop firms and all that. You can come and check it out there. I'll be doing some live trading and some topics as well over there, and I might be participating in the panels as well, so catch me all there. The other event I want to also mention to you guys is the Traders Talk with Mark Randall. Mark Randall is the business partner of Stephen Goldstein. So a lot of you will know Stephen Goldstein. So Mark Randall is a business partner and a co-host with Stephen on the popular Alpha Mind podcast. Okay, the Alpha Mind podcast, really good. They focus a lot on the psychology and everything. Really, really good. Looking forward to this interview. So we will be updating you all on that very shortly. You can also join this webinar. You can ask him questions firsthand live on the interview. So the link will be there, so you can go and join it when you get some time. Highly, highly recommend it. Also, by that, also you get to our email list as well. You get all our free video courses and also any events that we do in the future. Right, traders. With all that said, let's get to our topic. I'm just aware of time as well. Let me get that ready. Let me just bring the screen up. And there we go. So I got this ready for you guys, so it's a bit more easier to understand as well. Precise trade exits, probability based. Everybody says trading is based on probabilities, right? But nobody shows you probabilities. Strange, is it not? I asked this question about 10, 15 years ago, right? And the only person who could answer that question was my mentor, which I met him in one of the trading events. And then he gave me all the formulas, which he learned back from his mentor in the 1970s. So interesting, all these things. That's why I highly recommend you guys to look at 7 Steps to CTP. And those of you already watched all of that on the fence, you know what, take the next leap, go forward and get the smart money framework. Okay, you'll be in good hands. Now, what is one of the main reasons why people fail? Okay, why are they not getting consistent performance? Because they do not have all of these 4 things I'm going to mention. I'm going to show you the solutions to that, right? One, they're not aware of the main challenge. Okay, the main problem that usually traders go through. I'll explain that in a minute. Now, open equity or open profit studies, they do not have that. Or they haven't even heard of these terminologies because they are institutional terms. Retail traders don't understand that. Open profit, maybe, right? Which I'll explain to you in a minute, right? They don't have any of this research or studies, or they don't know how to go about even doing it. All the gurus that you'll see online, they will never talk in this sense. But once you hear this, this will make much, much more logical sense to you guys, okay? Now, the next thing is, once you've done these studies, you should have a probability distribution table, again, which most people won't have, and that is why they're not able to get consistent performance. And they say that trading is based on probabilities, which is not. They're not able to give you any solid probabilities. The final thing I'll also tell you, also most traders are not able to know when to let it run, because they might say, you know what, I got my exit, hit my target, right? So my target was here, but then after that, it just keeps running through. Oh my God, right? What should I do? When should I let it run? So all these questions I will answer to you. So let's take a look at it one by one. Okay, in the masterclass that we're going to be releasing, the masterclass webinar, we'll go through much more in detail. But now, because of time, I'll go through this a bit more in short. Okay, so over here, if you see, this is a good example. I'll show you in real time what's happening in DAX also, right? Which you're seeing. You see on this chart here, this is a typical thing. Let's say you entered here on the blue line, you're good in profit, right? Let's say you're up $5,000 now. Then what traders don't like is that it starts coming down. Now you're only up about $3,000, right? And then from this point onwards, then it goes up again, right? To about, let's say, 3,800. But at this point, your mind may be playing you out, right? You might be saying, you know what? I'm not sure what this trade is doing. Should I just take my money and run? Or because before it comes down and hits this level and carries down further, and then my 5,000 then comes down to only maybe 2,500, right? Maybe half, or maybe even 1,000 I get, right? Or is it going to do the other side? Okay, the other side is going to be, so one scenario is it shows you a red bar and you finally exit $1,000. You can't take the pain anymore. Or the other scenario, so this is scenario 1, right? Or scenario 2 is where it just takes out that high and just keeps going up, right? To $6,000, $7,000. So that's the second scenario, isn't it? But most people, they do not even, first of all, project these two scenarios. Okay, they are in their mind, somewhere in the thought realm. But first, you got to write it down. Then the next question, the vice question to ask is, which of these two scenarios is going to happen? But going to happen on what? On the P word, on a probability basis. You see, there's no 100% guarantee. The only thing we can do when you're talking about trading or investment is you got to think in terms of probabilities. This is the key. Now, if you don't think like that, your mind will be like an amateur, like a gambler, always thinking about one trade and then fretting about, is that trade going to win? Is that going to lose? And if you lose it, then if it doesn't go in your favor, if you're 5,000, you only got 1,000, then you'll be like, oh, there's something wrong with my strategy, and you go and tweak it, or you know what, you bin it and you go and chase another strategy. This is what happens, and it's a cyclical loop. So you got to nail these two scenarios first. This is the problem, right? What probability, which one is going to happen on a higher probability? And based on that, you formulate your rules for your strategy. Okay, so that's the first thing. Which scenario is going to happen on a probability basis? So how do we solve that? If I want to reiterate that further, so you see right now on DAX, right? You see the same thing here that's happening, right? So you see it's struggling to go past this, isn't it, right? So some of you might be saying, when I saw this bar here, before I saw this red bar here, when I saw this red bar, you might be thinking, hey, you know what? It's probably going to take that out and going to shoot up. But you do not know because your mind is thinking just about one trade. Whereas this can also happen, isn't it? Is what you're seeing at the moment. This is why when I correlated all the time frames together, it was not showing a higher probability. Yes, you know what? Don't take me wrong. It could well have done that. And some of you have been on our live streams, our existing clients who've been following us for quite some time. Will can see that. I've seen that as well. When you know what, it doesn't conform to what we got on our probability basis, and it shoots up. So what? That's an outlier. That's a low probability. That's an outlier. Just like when I was invited to IG Studios with Angeline, I was telling her that, you know what silver is doing at the moment, what gold is doing at the moment, is never happened in the last 15, 20 years. We've done even videos analyzing the entire stats portfolio of that as well, right? Which you guys can take a look at. And that's what I'm telling you. Most of these things I'm telling you here, the kind of framework and the thinking, you will never have heard it anywhere else, okay? So the only thing we can always say is, those of you are going like, oh yeah, wow, I never heard this anywhere, and I definitely want to tell others, you know what, hit the like button and definitely comment, spread it out to all your friends, at least let them get aware of this. How do you solve this challenge? And the quant traders, right, back in those days are geniuses. So they realized that the only way to solve this is to lock in your point of entry. Where do you come in to enter? And where does the maximum this trade goes? The maximum point reached. Now, I know some of you who are quite far ahead will start thinking, okay, but how do I define this maximum point, right? Traders, because I don't know at this, because I don't know at this moment, is this going to be maximum point, or how do I define a maximum point? And you see, traders, the answer really comes down to this. But before I explain that, the whole overall objective of this is that, remember what I said about just now? This has got $5,000, right? Right, unrealized profit at the moment, okay, came down to 2,500. And according to your quantification, let's say this becomes your maximum point, then you know that, you know what, this was the maximum unrealized profit I had. Now, as I explain the other parts, this will come much more clearer. This is why we got to lock in both these points. Let me explain a bit further. And because of that, you got no open equity studies, okay? So this is how then you understand your swing distance. So let me go back to here again, okay? What does OE mean? OE means, remember the $5,000 I said over here, right? That is your open profit, Okay, that is your open profit or unrealized profit. Or in other words, we call it open equity, an institutional term, right? It's open, it's not closed, right? So this is what is there on the table at the moment, okay? Now, how do I know if this is the maximum point? That's why I got to quantify my tops and bottoms. That's your first step. This is why in 7steps to ctp.com, after you have subscribed to it, when you look through that over here on the second video, we talk that. That's why the quant traders knew that. To solve this part about how much open profit is left on the table on a probability basis, the first part is to get a framework, is to get a structure. And that is to quantify the tops and bottoms. And that is called the smart money framework. Okay? And that's what we explain over here, right, on this video. So definitely go revisit them, or those of you who have seen it, then you will start to now appreciate more the real value of what we have created here based on the smart money framework. And also do remember, I always reiterate that, you know, this indicator is just not a buy and sell indicator, okay? It's just a framework for you to then choose from which ones you want to trade based on your strategy objective. So with that understood, now you can see, if I find out that after I quantify my tops and bottoms, 70% of the time, okay, it's doing $5,000 open profit before it makes a top confirmation, then I can create one strategy based on $5,000. Anytime it gets to $5,000, I create an exit, okay? That's called open profit, okay? But of course, we will talk about open profit in terms of the swing distance, which is what I am talking about here. So open profit, open equity. Now, how do I do the open equity? This is what I just explained. So what I do, I lock in my point of entry, and my point of entry will come in, okay, when the bottom is confirmed by the confirmation bar, okay. So in this example here, which is what I will show you here, and I'll show you on the DAX as well. So over here, you see, right over here, see, that's where the bottom gets confirmed. Okay, that's your blue line, right? That's your blue line here, okay? And the close of the bar, that's where the bottom gets confirmed. So we enter always from there. That's the starting point of the race, okay? Point of entry are locked in already. So I do that for all the previous ones. So point of entry, then the maximum point is where the orange arrow is. So now, because I've quantified my top and bottom, my structure, my point of entry starts from the close of the confirmation bar and then to maximum point, then I keep measuring my swing distance in that way. So if I go back to here, you can see over here that I'm measuring, I'll show you on a higher time frame. You see, when I got the tables over here, you see each swing, it's measuring it, right? 2.18 here, 4.548 here, 1.13, 0.88, all from this quantified systematic approach. And then if you take a look at over here, then you can see I'm measuring it from 2010 onwards, from the daily time frame all the way to now, to 16 years forward, okay, is what I am taking a look at. And then it's populating it on this table. This is how we get our distribution table, which is the next part. Without knowing your individual swing distance, without knowing your individual swing distance, that means all of this, right? Collated over the last few years, whether it's on a daily, 4 hour, 1 hour, doesn't matter. We can do this on anything, right? Without collecting it, the individual swing distances, you cannot get to the next part, which is what happens. You have no probability distribution table. That's why all your exits are guesswork, imprecise. And that is why even when you get out, you'll be regretting, like, bloody hell, why did it run? Or why, or you know what? I didn't get to my target. It's already reversed against me. You've got no probability, so you're going in blind mode, right? So that's the whole point here. This is what we call the open equity stats, probability stats. Nobody will show you this. I can challenge you guys, show me this table. Some people, have come to us and say, oh yeah, some people do, show some probabilities. I say, where? And then they just can't give you one reference link, right? Or they show it in some way, or they show it for one trade or two trade. That's not a probability distribution table, isn't it? If you do not understand this, that means you don't understand what a probability distribution table is, right? This is how you trade based on probabilities. Yes, traders? So from here, I'm able now to find out. Now I'm able to find out over here, if I put a target, right, for 0.25 ATR on the daily time frame, anytime a blue or orange dot comes, there's an 80% probability of getting there. Based on this, I can create a high reliable strategy that wins maybe 80% of the time or 90%. Okay? I can put a few more parameters to improve the probabilities if I want. Then if I want a medium-based target, which then I would say, you know what, yeah, I think this trade can go on to 180R, that's a 55% reliability, or a bigger runner, 20% probability I can create. Like that, I can create 3 or 4 strategies based on different target objectives, but based on probabilities. That's the main point here. Or some of you can keep it simple. Say, you know what, I don't like scalping, high reliability. I like more longer runners. I'll choose the 380R. But you see, some of you might be saying, oh, but the probability is 20.99, Tiru, right? But it's only 20.99 if you choose all the dots, right? As I said, this is not a buy and sell indicator. And this is what brings it to the last point. The last point is when to let it run. And that is based on the two things, right? As I said, the bonus one is when to let it run is based on selection. So when do you let them run to the 20% probability, the 380R? You select the dots, you select the ones which you think will run. And how do you select them? Not just guesswork. You use all the things that you've learned from before. That's why this framework can be applied on any methodology, right? So you can ask yourself, you know what is the other time frames doing? Remember in the beginning part, I looked at all the different time frames, direction bias, timing, all of that, right? Look at all of that. Combine volume on top. VSA, some of you listening in are VSA followers as well. Combine the VSA methodology on this. That's why a lot of our clients, SMI and VSA clients, are really powerful because they find both of these strategies really, really powerful. And we got comments saying, you know what, even on a Telegram channel as well, right? Maybe Glenn can find it and he can post it on the YouTube channel of what one of our clients who currently using this has said. Both the SMI and VSA is so powerful. It's saved them a lot of money rather than catching a dropping knife, falling knife, right? So that's what it gives you precision, not just guesswork. The VSA gives you the principles and then apply it with the smart money framework that has been developed back in the 1960s and 70s, which was again based on Richard Wyckoff's methodology, VSA just quantified, becomes very powerful. So we can apply any of it. You can even apply fair value gaps on this on top, and you can then apply your exits finally on top, right? You can do all of that, traders, okay? So that's what you got to do. The final thing I would say is diversification. Diversification using what? You see, you cannot fit everything all into one strategy. It's like saying, you know what, I want to fit 5 engines into one car. You just can't. You can't produce the best car in the world. You can't satisfy everyone in the world. Everyone will have different personalities and different interests. Not everyone will like a Ferrari. Some people just got family. Some people are just not racing fans. Some people just don't like the speed, right? Or some people do like. So there are different types of people out there. So what you got to do in terms of diversification is you can't fit everything. So when you say, oh yeah, it hit my target and then it ran. For that strategy, be grateful. Hit your objective. If you really want to capture the runners, create another strategy. Makes it more clearer, makes it more cleaner, and then you can see how the results all plan out. Now, you see, this is how actually we are able to actually trade with conviction and publish our results in real time. You see, on our YouTube channel, if you see, this is how we publish 2025 results. Over there, we just don't gloat about, just the profits that we made or whatever. We even go and validate why it would be real and all of that. Also, we go through all our since 2012 results, right? And show you all the years when we've made losses even. Everybody knows this, our paid clients. Even if you look at 2025, yeah, you look at the end, it's all nice, but beginning of the year, it was not that great, right? We were having drawdowns in the first 2 months. What gives us the conviction to publish that, right? All for our paid clients, we do that every day in real time. End of day strategies, right? Because for them, mostly for lifestyle purposes, end of day suits them better because they can't sit in front of the screen. But we got all kinds of strategies. We got intraday, we got macro strategies as well. We got end of day, name it, because we know how to develop the strategy. Because based on all of this framework and all these things that we've taught as well, we run investment portfolios as well. So all kinds of things. So traders, I know I've shot past above time. I know some of you are really enjoying this, but what I would say is, as a recap, what have we covered today, right? So in the topic today, we've covered on first, we looked at the main challenge, right? The two scenarios, what can always happen. To solve that main challenge, you have to lock in your point of entry and your maximum point reach. To do that, you have to quantify your tops and bottoms. Okay. From there, then you then get your OE studies by measuring your swing distance for each swing, and then from there, then you then get your probability distribution table. Okay. I know some of you might be wondering, oh, this is a long time. I don't know where to start and everything. You know what? Listen, the good thing is, if you're finding it all this makes sense, join us. I mean, the indicator will shortcut for you like for 10, 15 years. It's just not an indicator. It's really, it's a framework, right? It's not a buy and sell indicator. It's a framework that can be applied to any strategy, and can go through the videos and everything, apply it onto your strategy, and trust me, it would just save you many more years rather than looking to solve it. In fact, I'll be very honest, I don't think I would have been able to solve this all myself. It's because of the mentor's help that we've been able to put it all together. But I found this the only one that is so logical and systematic, okay, that leaves you at peace when you exit a trade. That's the thing that you want to get to eventually. Okay, everything is balanced out intellectually and emotionally. Right, traders. And then finally, we looked at the last one, which was when to let it run by selection and diversification. Right, quite a lot that we covered. I'm glad you guys enjoyed it. My final things before we wrap up for today, quick ones on the link 7 steps to CTP. If you want a very good understanding, very good systematic way to learn it, please go here, watch all of this, click on the green button there. 7 videos here, go and watch it in your own free time, goes through everything what I talked about just now. If you've seen it all and on the fence, go and get it. SMI OE, there's a small discount code over there on the YouTube channel that you can use as well under a YouTube video as well. And then over here, youtube.com/master the markets, you can watch all our previous videos, a live stream, hit on the subscribe button, hit on the all bell icon as well. Trade Nation, a quick shout out once again if you want to open up an account with them, find out the account details. And then finally, the events that is coming up. Prop Trading Expo in Dubai, I'll be there. See you all there if you're coming in. Or from Dubai, if you're coming in, come and say hi at Master the Markets table, and also to Tiru as well, where I'll be talking. And next one, last one, is Trader Stock with Mark Randall. So definitely come and see it. Nice veteran. He's the co-host on the Alpha Mind podcast along with Stephen Goldstein. Okay, so really looking forward to that. Really, really lots of experience on psychology, and has been in very, very big firms and big hedge funds and all of that. Okay, so all that is happening. That's on the 17th of Feb at 2 p.m. UK time. So that will be happening there. I think with all that said, that's a quick peek at gold. Gold is coming back up. If it does confirm, you guys can look into it. We might release it on the Telegram channel. DAX still not. You see, this is what's happening on DAX. It's coming back down. Okay, so the bar mechanics is taking over. Something we can look into as well. Right, traders. So we'll keep an eye on all of that. I'll leave it at this screen, 7steps2ctp.com. Other than that, if there are no other questions, the only question that really came was, Tiru, I know it's good on the, and this will take a bit of time to explain, is saying about the probability stats, but what gives us the confidence that it will reproduce in the future? The quick answer to that, I'll explain that in 7 steps CTP as well. The quick answer to that is monitor it in real time. Okay, right? But you will see also, if you've gathered some data over a long period and you've done some walk forward testing as well, and the validity of the percentage is still sustained, there's a high chance you'll reproduce in the future. Then the final conviction comes when you trade it in real time, and that's why we monitor those results and everything. Okay, so that's the quick answer, but definitely for the long answer, check 7 steps to ctp.com. Okay, other than that, traders, that's pretty much that for me. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for now.